A long-time Tesla bull, Ron Barron, joining us just in the last hour. And we saw the stock jump from about 3% to as much as 12 or 13% up. You can look at that stock. It's up over $100 right now. At one point, it was up about $113. Here's what Ron had to say about how he sees Tesla's bright future.
What's it going to be worth? I mean, gee, and I can't see how, of course you can see, but my idea is that in 10 years, this is going to be at least $1 trillion of revenues, and it's nowhere near ended at that point in time. There's a lot of growth opportunities from that point going forward.
Okay, joining us right now for the view from the other side, because not everybody is as bullish, though clearly there's a lot of bulls out there. We're going to welcome a Tesla bear. Craig Irwin is here. He's the senior research analyst at ROTH Capital. He has a sell rating on Tesla and a $350 price target on the stock, below the famous 420 take private number.
Yes.
So you're watching this and you're thinking, what's happening here?
It's simple. I just can't believe this freaking stock. It's insane. This is a big separation from what, those of us like to pull out the calculators and look at reality.
What do you think is driving this? Do you think this is all retail?
I think this is largely the fear of missing out. And no, it's not retail. The number
it can't be.
The number of large hedge funds calling in, the number of institutional investors calling in saying, where does it stop? What's the negative catalyst? It's definitely not retail. I mean, it started off retail, there's no question. But the momentum is huge. It's fear of missing out.
So what is you say the real value is $350?
Yeah,
Why?
that's my number. So I mean, that's taking a rational look at probable earnings this year and putting a multiple on it and saying that, this is a car company that has a great product and is going to be very successful. And I like the company. The market is, wow. I mean, we're now at, 3 times the enterprise value of Daimler.
You like the company. You have not liked this company for a very long time.
You forget. I upgraded for China last summer. So when everybody was saying it's the end of the world, I upgraded for China. And I downgraded twice since then because I try to have a little bit of discipline around valuation. When people were saying that financing was going to be a big problem, I'm saying, shoot, that doesn't make any sense to me. Tesla has no problem accessing the market if they need to. And I was actually defending the stock aggressively when it was going below 200.
Craig, what do you think's happening here? I mean, this is kind of crazy to watch. Stock up 20% yesterday and now up almost 15% in the pre-market. That doesn't happen.
Yeah, so there's a couple things, macro things on a global basis, right? There's divestment of oil and gas stocks, and then there is huge interest in sustainability. Socially responsible investing is front central for most of the tier 1 institutions globally, particularly in Europe. You can't sit down for a meeting with a tier 1 institution without them bringing up sustainability. And there are very, very few credible ways to play EVs. Everything ends up being small cap, micro cap, and these funds can't buy those stocks.
And they can't buy the big GMs or Fords or Toyotas or anybody else because it's not just electric vehicles. They're also fossil fuel based. And a lot of them do have specific mandates that they, if a company does have participation in both markets, they can't play.
What about all these wonderful metrics that Ron went through? They're going to sell 10 million cars. The batteries are going to do this. Like, he starts talking about these revenue numbers. I mean, if he's right,
yeah, that
number that we're looking at is correct, right?
If he's right, he's dead right. But the question is this, right? If you look at Germany, for example, the auto companies over there are nationally important, strategically important. There's no question they're going to get sovereign money to build battery factories to support Daimler and BMW, right? They're already getting sovereign money. They will get it.
That's to counter when Ron Barron says those companies cannot reinvent themselves because they have so much invested in the combustion engine and they can't just redo the whole process because, investing in batteries is too expensive. You're saying the governments will help them.
Exactly. The other thing is, these guys are waking up. So, it's a check of mine. It's not completely confirmed yet, but I believe Volkswagen is actually pulling forward mass production from 2022 to 21. So they need actual samples delivered. I'm hearing from a lot of people this year, pre-production samples.
Of EV cars?
For components for EV cars, key components. So these guys are waking up and they're hearing from their boards of directors, do it faster, which is what Tesla stock is saying. It's a very clear message.
What happens if Tesla actually does introduce a battery? I mean, it becomes in the battery business as well in a meaningful way.
Strategically, I don't see them having any advantage, right? The cost structure of what they're doing, they make a zillion cells of one type, and that does give them a moderate advantage for the Gigafactory here in Nevada. But versus the other global producers, there's no structural advantage on materials. This is already a supply chain that's heavily commoditized, and nobody makes a lot of money producing cells. You can buy cells from 4 or 5 really good producers. Tesla's not structurally advantaged there over the long term.
Can I show you a chart? Michael Novogratz yesterday tweeted a chart that said, here's Bitcoin in 2017 versus Tesla in 2019 or 2020 right now, if you're kind of watching what happens with that. I don't know what this tells you. Like, do you look at this and say it's really volatile? Do you look at this and say it's momentum? I don't even know how to play into this.
Fear of missing out. That's what I'm going to write it up to. I think it's fear of missing out.
Of hearing a new story, hearing the China plant going better than expected.
But you know what's changed here a little bit? I think the short message or the arguments on the short side is no longer about, used to be, people use the F word, fraud. They used to say that he was or spinning or misleading people.
Or he can't make the cars.
Or he can't make the cars, or he's not going to be able to raise the money. All of these things, all of that is now, is that really off the table?
There are still some people that push the F word out there. I don't subscribe to that. I never have.
Right.
But
I use a different F word.
Yeah, no, reality though
is this is a company with free cash flow.
It's behind them. So yes, there are some very large contributions to one-time benefits. In the quarter, is 7 million more vehicles out, 7,000 more vehicles out of the channel. That's $350 million bump, right, to earnings and cash flow. Right? So there are these one-time factors that do have a material impact in Tesla's financials that you can't run that off to the horizon. You can't perpetually sell more cars than you make. But the reality is it's a good company. The financials, I think are sound. And the reality is they're going to have...
It's a good company, but not a great company. Or maybe even a great company, but not
an expensive company.
An expensive company.
3 times Daimler, 5 times BMW on an EV basis, that's rich. That's a big bet. The big question I'm pulling it back to when I'm talking to people is, do you think the other OEMs are going to catch up in 2 years or 10 years? If it's 10 years, you got to buy the stock.
One of the things is, if you heard Ron Barron's argument about the OEMs and you heard Ron Barron's argument about dealers and the economics of dealerships and the real money for them historically being in the servicing and everything else, and if you're going to take that piece out or that's going to get compressed, the whole sort of structure doesn't really work, and that over time that's going to have to change. And that actually does give a Tesla a lot more running room than you might otherwise think.
They are a disruptor. There's no question. There are also issues around Tesla's approach to service. People waiting far too long for their cars to be fixed. The quality of service. It's not without valid points of criticism.
Yeah, there have been complaints recently about the being charged for downloads that people didn't want, that they actually accidentally butt dialed into.
Yeah.
I feel like hiccups you get over time as you improve the process.
I will say that the conversation has changed. I mean, TSLAQ is not something that people are talking about anymore. That's gone, right?
I don't know how much that was front central. I mean, I try to stick to sort of the middle of the road and ignore some of the fringe theory stuff, and I hear it all. But the reality is, this is a company that will see decelerating sales. I don't believe the 50% off to the horizon. I think that assumes Tesla operates in a vacuum. The Taycan, yeah, it's a little bit of a disappointment on range, but the Model S can't make it around the Nürburgring, right? The Taycan crushes it. People that want to buy an EPA mileage number versus a wicked cool car, they're probably going to end up going for the Taycan, as the wicked cool car. Tesla's got the update on the Roadster coming probably at the back end of this year, so we'll see how that compares. But at some point, reality's going to set in, and saying that we're going to have more Model Ys than SX and 3 put together, I think is really aggressive.
There have been criticisms by some short sellers about internal executive turnover, that was a sign often that a company was about to go. And has that finally settled down, or
Well, you know, I also hear from a lot of people that have gone in for interviews and come out the door screaming, running out, right? Elon's he's a very difficult manager, and I probably shouldn't use the word difficult. I should say unreasonable, right? He doesn't want to hear a no. He wants to hear, this is what I got wrong, this is what I learned, and this is how I'm going to fix it. And that's a challenging culture to operate in. So
it's like a good culture.
It's a great culture, but it can be brutal. You know, it's kind of like you know, Apple many years ago.
Right.
And that's where he deserves credit. I mean, he deserves a lot of credit.
That's all
Yeah,
I got
Craig.
for you, Craig. Thank you.
Thank you.
Thank you.
It's we'll see what happens here. You'd short the stock. I mean, obviously you'd short the stock.
Wait, would you short the stock?
Jeez, you know, timing is tough.
Yeah.
not
Everybody's been
buying and
stopped
shorting
out.
are two different things?
Yeah, but right, that's very different. People who have shorted have gotten crushed, and I've had people who have told me there's no way they'd go near shorting that.
Yeah, no, I mean, you've got to time this one carefully. It's more of a fundamental rating, and, you know, it's evaluation driven, and that's, it's put me in a tricky position. That's really where it is.